Okay, so, one thing we haven't really talked about is diversifying your portfolio. And you had mentioned to me that you've been thinking about that more lately.
Yeah, for sure.
And one of the things that I've been reading about that I found really interesting are REITs,
REITs.
real estate investment trusts.
Okay.
Um, and, it's funny because one of the articles that I was looking at described them as like a real estate masala.
Masala.
Yeah. So it's like you get all the flavor of real estate investing
Yeah.
without all the fuss of, actually having to buy and manage property.
Yeah, that's a great analogy, I think, because at the end of the day, REITs are companies that own and operate income-producing real estate.
Oh,
So think about, all those office buildings and apartments and shopping centers that you see.
right.
REITs are the companies that own and manage them.
So instead of me like, having to come up with a huge down payment and get a mortgage to buy a whole apartment building,
It's echo.
I can just buy a little share of a REIT.
That's right. You buy shares in these companies just like you would buy stock in any other company.
Okay, so it's like getting a little sliver of a skyscraper or a shopping mall without the headaches of being a landlord.
Precisely.
Now, two things really jumped out at me when I was doing the research for this, and that is income and diversification.
Yeah, those are two of the biggest reasons why people invest in REITs.
Okay, so let's break that down a little bit more.
Sure. So first, let's talk about income. REITs are actually legally obligated to distribute at least 90% of their taxable income to shareholders as dividends.
Interesting.
So it's almost like receiving rent payments, but without having to deal with all the hassles of being a landlord.
Okay, I like the sound of that.
And it's interesting because they have to distribute their taxable income,
Right.
which means they pay taxes on their profits before they give those dividends to investors, and that can actually be quite tax efficient for investors.
Okay, that makes sense.
Yeah.
So it's not just about potential property value increases, but you're also getting this nice, steady stream of income from the dividends.
Exactly.
But haven't REITs also historically performed pretty well in terms of just the overall returns?
Yeah, they have, and that's why a lot of people find them attractive. Over the past few decades, they've generally produced annual returns somewhere in the range of 8–12%,
Wow.
which includes both the appreciation in the share price and those dividends that we were talking about.
Okay.
A good example of this is the Vanguard Real Estate ETF. The ticker symbol for that is VNQ, and that has pretty much tracked the overall performance of the REIT market.
Okay, so that's kind of like an easy way for somebody to get started if they're interested.
Absolutely. It's a very accessible way to get exposure to a diversified portfolio of REITs.
Okay, great. So far, it sounds like REITs are like a magical solution to all my investment problems.
Well, not quite.
But come on, there's got to be some downsides, right?
Of course, no investment is without risk. And one of the things that you have to watch out for with REITs is interest rates.
Yeah, I saw that mentioned in a couple of the articles. Why are REITs so sensitive to interest rate changes?
Well, you see, because REITs often finance their property purchases with borrowed money.
Okay.
When interest rates go up, their borrowing costs increase, which can cut into their profits and potentially impact their share prices.
So if I'm thinking about investing in REITs, I need to be mindful of what's happening with interest rates.
Absolutely. It's definitely something to keep in mind. But remember, historically, REITs have actually delivered pretty solid returns over the long term.
Okay, so it's all about playing the long game.
Pretty much. It's not about trying to time the market or make a quick buck. It's about making smart, informed decisions that align with your long-term financial goals.
And speaking of making smart decisions, you mentioned earlier that REITs are a good way to diversify a portfolio.
Absolutely. And that's something we should really emphasize because REIT performance isn't directly tied to the stock market. You know how stocks go up and down?
Right.
REITs tend to march to the beat of their own drum, so they react differently to economic cycles,
Okay.
which means that they can actually provide a hedge against stock market volatility.
So if the stock market takes a nosedive, my REIT investments might not be as effective.
Exactly. That's the idea behind diversification.
Yeah.
You want to spread your risk across different asset classes so that if one area of the market is struggling, another area might be doing well.
Okay, I'm starting to see the appeal here. So if I'm listening to this and I'm thinking, maybe I should add some REITs to my portfolio.
Yeah.
What are some of the first steps that I should be taking?
Well, I'm glad you asked. First things first, you need to figure out your own personal investment goals.
Okay.
What are you hoping to achieve with your investments? How much risk are you comfortable taking? And what's your time horizon? Are you investing for retirement or for a down payment on a house or for something else entirely?
Right.
Once you have a good understanding of your own financial situation and your goals, then you can start doing some research on specific REIT sectors that align with your interests.
So, for example, if I'm really bullish on the healthcare industry, maybe I should look into healthcare REITs.
Exactly. Or if you're interested in the technology sector, you might consider data center REITs. There are so many different types of REITs out there.
Wow.
The key is to do your homework and find the ones that make the most sense for you.
When we first started talking about this, I was thinking about that real estate masala analogy.
Yeah,
And it almost sounded too good to be true,
right.
like all the flavor, no fuss. But now that we've delved into it a little bit more,
Yeah,
I realize that it's not quite that simple. There are risks to consider, just like with any investment.
absolutely. But the beauty of REITs is that they offer a unique way to participate in the real estate market without having to be a landlord.
Right. You don't have to worry about leaky faucets or property taxes.
Exactly. You
Yeah.
can just sit back and watch your dividends roll in.
This has been really eye-opening, I have to say. And for everyone listening out there, think about this. How could incorporating REITs into your portfolio potentially help you reach your long-term financial goals?
It's definitely something to explore.
There's a whole world of real estate investing out there, and REITs provide a very accessible and, dare I say, flavorful way to get involved.
I like that, flavorful.
All right, well, that's all the time we have for today. Thanks for joining us for this deep dive on REITs, and we'll see you next time.
See you then.
Bye.
Bye.